Good morning, ladies and gentlemen. Greg McCloskey. This is the Kickstart video. Today's date is May 22nd, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. Give you the biases, the risks, the targets for each. So let's get started. I'm going to start by taking a look at the euro versus US dollar on the hourly chart. And what we can see in trading is that over the last 5 or so trading days, the market has a downward tilt. Now, having said that, it wasn't until today that the price had a lower low over that period. We took out the 61.8% retracement at the 1.08354 level in trading here today. That is of the move down from the high price. I have to go to the 4-hour chart to take a look at this. The high price from this point right here, this is a March high, to the April low. So took out that 61.8%, 1.08354. Going back to the hourly chart, and at the same area was the 200-hour moving average. That moving average came in at 1.0836, I guess, and moving below both those levels right here, tilted the bias more to the downside from a technical perspective. But as you can see, the price is rebounding back up toward a retest of those levels, and so far the level has been able to hold resistance up here. So this is going to be a key barometer for both buyers and sellers in trading here today. By the way, last week instead of the 200-hour moving average, the 100-hour moving average was joined at the 61.8% retracement right here, and it found support buyers against that level. So today we fall below the 200-hour moving average in both the 61.8% retracement of that move down from the March high. So sellers are taking control below those levels. We'll see if they can keep control in trading here today. Earlier today also, the 100-hour moving average stalled resistance right here, giving the sellers the go-ahead to push to the downside, and indeed they have. And now with the break below 61.8% and the 200-hour moving average, it's increasing that bearish bias. On the downside, the next key target comes against the 100-day moving average. That level comes in at 1.08157, and it was in trading last week that the price did move above that 100-day moving average after first testing it right here. We traded above and below it here, but the last little dip right here tried to go below that level, not to be. We saw the price move back to the upside here. I think that was off of the CPI, was off the CPI retail sales data. So we were trading right around the 100-day moving average on that day before moving sharply to the upside and extending those gains and trading on, I guess, Thursday last week before rotating back to the downside. So sellers are making a play, but we have the 100-day moving average below still to contend with if the sellers are to take more control. Finally, let's take a look at the dollar versus yen next. And as you can see, we are trading to the highest level this week, currently at the moment, extending above the high price that we saw in trading yesterday right here. The next target comes against the high price from last week at 156.75 level. That's right there. This week in trading yesterday, the price came down to test the 200-hour moving average right here, got within a few pips of that level before rotating back to the upside. We also stayed well above the 100-hour moving average, which has now surpassed the 200-hour moving average up here. It's going to take a move below both these moving averages to increase the bearish bias in the dollar versus yen. If you can't do that, then the buyers still remain in control. I'll have earmarked this level here at the 156.28 as a level of interest from a technical perspective, at least from historical perspective. It was this swing high right here. This is the intervention and then snapback rally. Sellers down here, we came back up to that level through here and tried to hold support against it in this area right here before breaking back below it here. We did move back up to it in trading on Monday's trade, found willing sellers against it here and here. Traded above and below it admittedly, but today we did base against that level and move to the upside. So it's going to take a move below the 156.28 level to also increase the bearish bias in this currency pair going forward. If it doesn't get below that level, then guess what? The buyers are still more in control with the 156.75 level. The next target, get above. If it does get above that level, probably look toward this level right here. Again, this is all during the intervention period where sharp moves to the upside and downside before moving lower through here. So that level comes in at 157.23 on the top side. That's if we break above 156.75. Finally, let's take a look at the sterling versus US dollar. Have it on the 4-hour chart here. And what we saw in trading here today was a move to the upside. This is off of the more hawkish CPI, or the stronger than expected CPI data. Markets were expecting a little bit better data. The core measure came in at 0.9% versus 0.7%, and the headline number was also a tick higher than expectations. That sent the price up higher to 127.60. That level corresponded. I had a horizontal line going across that level. It corresponded with this high right here, and then this high right, these highs right through here. Before moving to the downside, we came back down to that level right through here before breaking lower, and that was the last time the price tested this level right through here. So there is some history back in time. It's not necessarily the end-all be-all level of resistance, but it did do a good job of holding at the 127.60 before rotating back to the downside in more recent trading here. And back trading above and below this swing area between the 127.22 and 127.35 level. Taking a look at the hourly chart, see if there's any clues off of that in trading here today. What we can notice off of the hourly chart, at least this week, and specifically yesterday, is that the price bounced off the 100-hour moving average. That increases that level's importance going forward, and lo and behold, the decline down here in trading here today off of our high price here came right back down toward that 100-hour moving average, found early buyers and are pushing back to the upside. So the 100-hour moving average level has increased in importance with the test today, the successful test on the downside. Well, if that level is able to hold support, then the buyers still remain in control in the sterling versus US dollar. On a break below that level, then we would expect to see further downward momentum with the 61.8% retracement, 200-hour moving average, or 100-day moving average, all targets on the downside on further selling pressure. So that's my technical look at 3 of the major currency pairs to kickstart your trading day for May 22nd. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.